Hi, I'm Adrienne Harrell with Newbridge Management, and today I just want to briefly talk to you about the 1031 exchange. Some of our investors ask us, what is a 1031 exchange? I will tell you that it's not something that we deal with personally, but I know enough about it to be dangerous and to be able to give you some information. A 1031 exchange occurs when a property owner sells a particular property and identifies and purchases another in order to not pay capital gains taxes. There are certain steps that you have to go through in order to complete a 1031 exchange and not pay the IRS and the capital gains. One of the first things that you have to do is make sure that you are selling the property and purchasing a like property. What I mean by that is that you cannot sell a business and decide that you're going to buy real estate and say that you're doing a 1031 exchange. But if you're selling a single family property, you can purchase a multifamily property, a commercial property, or even an agricultural property, because that is going to be the investment that you're going to be utilizing. So you have to sell the investment real estate and purchase an investment in real estate. The other thing that you have to keep in mind is that you have only 45 days from the time that your escrow closes, the sale of your property, until you are able to identify the like property or the other investment that you're going to be purchasing. The other thing to keep in mind, and in addition to that 45 days, is a 180-day period, because you only have 180 days from the sale of escrow to close the transaction on the second property and close the escrow on the property that you have identified. You also have to utilize an intermediary. An intermediary can help you with many things. And one of the important things is that they have knowledge of all of the IRS forms that is going to help you defer the payment of the capital gains taxes. So the intermediary basically is the person that handles all of that for you. And also, you cannot take the funds out of escrow when you close escrow on one and decide that you're going to hold on to it and then later on purchase the other property. The intermediary handles all of that for you. These are some of the things that you have to keep in mind for a 1031 exchange, but before you do, make sure you talk to your accountant because there is a cost associated with a 1031 exchange, and that cost may or may not outweigh the benefits of paying your taxes. For example, 1031 exchanges could cost anywhere from $1,000 to $1,500 per property. And by the time, if you're selling and buying multiple properties, that sum could be as much as $9,000. And you have to decide the $9,000 that you would be paying for the 1031 exchange, whether it outweighs the amount of taxes you would be paying for your capital gains. So there's a lot of other things that you do have to keep in mind before you complete the 1031 exchange. But thanks for visiting our website. For this and other tips on how to manage your real estate portfolio, visit us at newbridgemanagement.com.